It is Friday, June 30, 2017. Market just closed. Account value is 111K and a little something. Today we closed our position in LabU. We had 1,775 shares. We bought at 65.65, closed it at 64.43 to buy 11,400 shares of UVXY, and we paid exactly $10 for it. Okay, here I have two charts. I have the VIX on the left and UVXY on the right. And to me, the biggest takeaway of yesterday's spike in the VIX was that the short volatility trade is extremely crowded. And when they are running for the hills, when they are scared that the VIX spikes higher, then the exits become very, very narrow, and the people then are price indifferent. That tells me this trade is extremely crowded. But also, the way they sold off the VIX right away, that was also extremely violent. That tells me that these people have high conviction in that trade, that it is very, very, very crowded and it's everywhere. And I think it is worrisome, because when we look at the price action in the NASDAQ is still trading very, very poorly. I mean, it's awful price action if we actually put it in context to what the market has been doing. I'm not sure where the Dow closed, 100 points higher, something like that. But look what the NASDAQ is doing. It cannot even get back into this range we have been in. So it's hovering at the lower end of this range. The fact that we couldn't get back into this range here on a day when the Dow just before the close was up 130 points. I mean, it sold off into the close. But that is also a telltale sign that this is consensus now. People are afraid of missing out. Fear of missing out is now bigger than the fear of making a mistake. That is why I believe there is complacency in the market. The way tech is trading is very, very, very worrisome. And I think what the SOX has done is what the NASDAQ will do next. Because here we tried to get back into the range. That is exactly where we are in the NASDAQ. And then it took the next leg lower. I think tech will do that early next week. And it will probably take the entire market with it, just because I think it is a crowded trade. And if we look how the market closed today, I mean, that was a terrible close. We make a high here, an intraday high, and then we sell off like this. That is a very ominous sign. And I think next week could get very, very, very interesting. And I much rather be long volatility than short volatility. What we saw yesterday in the VIX, it can get actually a lot more violent. If we do get a bad headline of any sort, and it is not just sector rotation out of the FANGs into energy or into banks, and there is something with substance behind it, the VIX can easily double in a day just because of positioning. So I think it is extremely dangerous to be short VIX right now. The market taught us a very interesting lesson this week, that it does a lot of random stuff right now. It rallies for no reason and then tanks for no reason. And that is part of the argument that I'm using to say, okay, this heightened volatility is not a bullish sign, it's a bearish sign. And when I look at today's close, that is exactly the same. We rally, we make a new high. It looks like everything is sunshine, reggae, Ibiza, and all of a sudden, kung pow, sell orders are coming in. I mean, we had like $1 billion to buy into the close, and then this happened. Very, very interesting price action. And I believe the odds are highly skewed to the downside from here, just the way tech is behaving, the way the VIX is behaving, how quickly the VIX spiked, but also how quickly the VIX was sold off, because people thought like there is only one free lunch out there, and that is shorting the VIX. I believe these people will get a wake-up call, and I think it is just around the corner. At least right now the market, for the first time in a long time, is positioned to do something to the downside that nobody is expecting. I brought up the future charts here on Finviz because we can see US indices, the Nikkei, the Japanese stock market index, and European stocks, as well as the German market, the DAX, and the VIX, because it gives us a broader picture And this is where I believe this weakness is coming from. I think everything has to do with Super Mario, with the president of the ECB, when he on Wednesday said that, or declared victory over deflation. This caused interest rates to spike in Europe, interest rates to spike in the US. We went from 214 in the 10-year to 230 today. That's a massive move in yields. And look what the equity markets in Europe have been doing since. This is the Euro Stoxx 50 and this is the DAX. They are not liking it. So this is telling me that because now we have two central banks that are no longer pedal to the metal accommodative. So the ECB is joining the Fed in tightening. At least the next move will be towards that. The market has already begun to front run that news, and that is why rates are rallying, and also equity markets are voting on it, and the initial reaction is not good. The question is it going to get a lot worse? That remains to be seen, but I think the risk reward is heavily skewed to the downside. And if we look at a little longer time frames here, there is so much real estate to the downside. I mean, look what the German market has been doing. It was straight up, and this is just a blip here. This can easily drop till here. If that were to happen, I mean, there could be some avalanche of selling coming in global equity markets. I'm not saying it will happen, but it could happen. For the first time in a long time, I believe the risk is heavily skewed to the downside, and that is why I want to be long volatility. Before I wrap it up, let's take a final look at UVXY. I'm liking the price action into the close and how it is behaving after hours. The only thing that I should have done differently, instead of buying a full position at a time, I should have bought a couple of bullets that I fire one early on before the reversal actually occurred, when I sent out the first herd alert that I was looking for a potential reversal. I already was looking at UVXY, and it traded somewhere around here then. I was just not willing to buy a full position because I wasn't sure if the market was going to roll over. So going forward, what I will do, I will split up positions in into at least two bullets. So when I am looking for a reversal, that I throw one bullet at it and then see what the price action says, and then potentially a second. That will be a way to manage our risk better, and it should also improve our returns because it allows us to pull the trigger earlier. As you all know, herd alerts will become a paid membership next week, so I want to use this opportunity to say goodbye to all the sheep who are not yet ready to commit and who we are losing. And if you have anything to say, good or bad, recommendations what I could do better, how I could serve you better in the future, or if you just want to get something off your chest, shoot me an email at info@sheeponwallstreet.com. This is it for today. I'll be back on Monday with another recap.